Mr. Agrawal, what does that mean for the markets as well? You've been on record now saying that after that initial spurt post-COVID, the earnings growth has kind of come off a little bit. And the real wealth only happens when we move to 1,500 to 2,000 rupees EPS on the Nifty. Does that happen in the next couple of years, sir?
Yeah, so we are at about 1,000, 1,100 kind of EPS, 1,100 rupees EPS. Now whether, so I think we are stagnating at about 9-10%. This quarter actually is better than what the analysts they expected. That is at my end, our analysts were expecting about 6-7% and actually turned out to be 9 to 10% of the earnings growth. So clearly analysts are really little behind the what to expect. And as you said, PMI and other things are somewhat better. Oil is holding out at 65, 67. So I think there are a lot of, backdrop is very good. Just that little bit of push in from the credit growth particularly, that will lead to the better consumption. But credit growth is yet to pick up, and there is no reason why it will not pick up. As the RBI and even the finance ministry, they are on the job to see that credit growth picks up. And at a lower rate and lower prices of the products, I think consumption will pick up. So, but then we have to have patience. 6-7 months it might take. But so my sense is, by the time it is third or fourth quarter, you will really see impact on the earnings growth. But then markets will be smarter because companies will be working 3 months, 4 months in advance. So the mood is going to be much better. So I won't be surprised if the markets start going to new highs more just around Diwali time. And once, I think on the day of announcement of GST actually, when you say that, okay, from today onwards, instead of 28, it is 18, I think numbers will be very different. The index will be very different. Now, where it will go, how much it will go, domestic flow is so strong, and foreigners are kind of not interested in India. And I don't think they'll be interested because for whatever reason, global reasons, they may not be interested in India because the valuations don't fit into their scheme of things. And they'll keep missing out on India because India's domestic flow is so big that we'll be able to take the market ahead on the back of earnings growth.
In the past, you've told me, Mr. Agrawal, that जो फिरंगी बेच के गया वही ऊपर के भाव में लेगा. Can that happen over the next 3 years?
Yeah. It looks like, because we are running ahead so fast that they want to catch up. Whenever I go to Singapore, Hong Kong, they all tell me that they love India. They have whatever little they have invested. Some guys, they have left. How do we re-enter? I said, India is a decadal story. It's a compounded story. And, bereft of any kind of recessions and all. There is a slowdown, but there is never a recession kind of situation. So it's a market which is very compounded, anywhere between 10 to 15% per year, and with a very limited drawdown unless there is some global problem. So, but then you can't be in and out because when it will explode, nobody knows. So I think they will come back. Of course, they sold at 20,000, 25,000. I think they have to come. If this earnings blast happens post-Diwali, I think they may relook at it. But looking at the kind of underweight they are in, I believe there was some note that 60-65% of the FIIs are underweight on India. So that is also creating another bazooka kind of situation that whenever they turn, everybody will turn positive. And at that point of time, domestics also want to buy and foreigners also want to buy. So what is going to happen? So I think if the earnings pick up, quite possible P will also go up. So if earnings comes to 15-20% kind of growth next year, say 26, 27, I think the P multiple might go from 22 to more like 25 or so. So that kind of a situation is also possible.